Happy Friday, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on Friday, the 31st of March, 2017. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance seems bearish this morning. Markets are generally mixed to weak. Out of what is it, about a dozen sectors that I monitor, futures contracts that I monitor, only three are up, and those are the Russell up 1.8 points or 13 basis points. The US dollar's up also 13 basis points, and then the DAX is up 2.5 points, pretty much break even. Everything else is red across the board, including the Treasury note, which is off by a tick. Euro stocks all the way down to gold. Crude oil's down 17 cents, 0.36%, and gold being the laggard today, $1,242.80. It's down $5.2 or 0.42%. The markets globally are also off, seeing the FTSE down, Hang Seng down, CAC 40 down. So that's where we are today. We're just coming into a market that is really, it's not like it's selling off, but it is mixed to weak. The key news yesterday, or from the overnight session, um, the French preliminary CPI came in weaker at 0.6 versus 0.7. German March unemployment change came in at negative 30,000 versus negative 10 expected, so quite a bit worse. Um, and this is a record low from the post reunification of Germany. Um, the EU released its guidelines for the Brexit negotiations. And then in the US, and then of course we got UK's GDP came in at 0.7 in line. Eurozone advanced CPI came in at 1.5, weaker than 1.8. And then the US PC deflator came in a month on month at 0.1 in line, and core came in at 0.2 in line. What we're looking forward to today, as far as releases, we're looking for this morning, we're looking for at 8:45 Central, 9:45 Eastern, we get Chicago PMI for March, expecting 56.9. Reminder, this is a subscriber number. Generally comes out at 41 or 42 past the hour, and then released to the public at 9:45. Generally, I get the rumor at about the same time we're released. We generally see the move for this product or for this release at around 9:40. So just pay attention if you have an open position without cover to not wait till 9:45. By then, the market's already responded, probably. At 10 o'clock, we get University of Michigan confidence final. This is the final, not the prelim, so it has less of an impact for March. 97.6 expected. And as far as speakers, we get Fed Speaker Kashkari at 10, and we get Fed Speaker Bullard at 10:30. And that ends our week. I want to remind you that it is like Friday. I would appreciate you clicking, if you don't see the thumb up underneath the video in front of you, just click on the YouTube icon on the video and go to the YouTube version of this stream and hit the thumbs up button. I'd really appreciate that. Let's take a look at what we expected yesterday. The primary hypothesis yesterday, and quite amazingly, we had two primary hypotheses work out this week. Usually, lately it's been one, and mostly two. Hypo two has been in the works, but yesterday we were looking for a quick test down and then a rotation, a key rotation being up. Key rotation being up early on, and then looking for consolidation, and then I was looking for it to break the 2360 and pushing through to 2362.50 on the overnight high and settling around 2365 right in this low volume node zone. and that finishes up our day. That's pretty much what we got yesterday. We got what looks like a double top. I'll show you that in a minute. The secondary hypothesis, which clearly didn't work out, is responsive buying into the point of control and beyond to the value high area right here, and then the key rotation being down, but then settling somewhere in the middle. The market is bullish over the last few days. We expect that to continue. We talked about, I did bring up the fact that I believe that it's fairly bullish and to be cautious if you're holding swing short positions. Here's what actually happened. Market opened at 23.56. Sold off the value low right here. This gray, the edge of the gray, is value low right on the dot, down at 23.54, and then the main rotation pushed us higher, pushed us upwards, and then we ended up pushing all the way to 66.75, pushing through my target by about 7 ticks, and then came all the way back to the prior day's high, which is also the mid area. Nice little setup here, and then reattempted that high, and note we are 1 tick short of that high. Even though we're 1 tick short, I'm considering this a double top. Lots of volume went off at the top here. There's a lot of volume that went off up here and up here, putting the point of control sharply near the top here. We are trading below it. The market's trading below it, but this is a P-shaped profile. So if we drew it from the right, then we would have a shape that looks like this, P-shaped profile with a push. And if we finish in the P, wow, that sounds really bad, finishing in the P. If we finish in the circular part of the P here, then it could represent short covering, aggressive short covering. And so that's the theme that we expect to continue on through into next week. Here's the bigger picture, the 15-minute. So as we push forward here with our current balance, right, we end up, actually don't want to extend this. We ended up moving through this balance area, and we're taking back everything we did on that big sell-off on Tuesday. The point of control being 23.40. And we're holding steady into the thin part of Tuesday's trading. So if I send this to the back and zoom in, and go back to Tuesday. So you'll see here on Tuesday the sell-off. Everything above 23.57 is very, very thin up here, with some minor areas of balance, very, very minor. And we pushed into this 23.66 area, this LVN up here, which is also the low of a couple of days. It's the low of the 15th, and it's the low of the 20th, and then that's where we found resistance yesterday, and the market stalled. But overall, this is a very bullish trend that we've got going on. Let's look at it on the market profile. Okay, so you can see here, we put in this excess low, a beautiful excess low. The market came down. The market started down here, tested lower, and shot up and finished higher. Okay, and we kept doing it again and again. We opened down here, we shot up and finished higher. We opened down here, we shot up and finished higher. And we opened down here, we shot up and finished higher. We're putting in all these P-shaped profiles all the way up, taking back this entire the sell-off day and pushing us back into the upper balance. Very bullish, and the story continues. You already know it. Been talking about it all week, but that's how things are shaping up right now. Now, to look at the overnight. Again, the overnight theme last night is again to open, chop around, finish, go, stay near highs or test the high, and then fall off. And in general, by this time of the day, it stays down here, and then we end up rallying on the open. Today, we are we rallied already. We've started to rally into the overnight session. We're above the point of control. We've left the point of control behind us. We've left the mid behind us a little bit here. We've pulled back a little bit, but this overnight session is setting up to give us a fairly noisy open, in my opinion. But it's got a pretty good base beneath it, 2358. The 2358 area has some pretty good volume underneath it. Overall, the overnight volume is about 145,000. It's okay. It's in line with what we would expect. Not much to glean from the overnight session except that it has built two distributions and has moved back up to the higher distribution after settling down into the lower. So the open is likely to be fairly noisy. So here we are. This morning, the expectation on the open is for chop again. Just give it 15 minutes or so. We've got PMI coming in that's likely to move us out. I'm looking for a test lower and then for the market to start moving up to the point of control from yesterday to push the high. I'm looking for a poke through the high, but for the market to hold up in this area. Now, here's the thing, and pay attention. Today is the last day of the month, and it's the last day of the quarter, and it's a Friday. That combination there, in my experience, has caused the close to be fairly active. And so what we have here, so when we get to the close of the day, you do not want to fade whatever move happens. So if the market starts to sell off around 3:15, 3:30 p.m. Eastern time today, you don't want to be the person buying support. It's likely to be OTF action or higher time frame institutional action. There's likely to be window dressing, rebalancing, all that stuff going on, just shedding losers, things like that. Um, and you don't want to fade those moves into the close today. So stay away from wanting or the urge at the end of the week to just fade the market. It's likely to cost you what you've done the whole week if you're up for the week, or put you in a worse position than you were in. So on the close, do not fade these final moves. You want to find a spot to go with it. It is best to just avoid it. Again, quarter end, month end, you don't want to fade this closing trade today. This is my primary hypothesis for today. Oh, that's a heck of a circle. That's the primary hypothesis for today. Again, secondary hypothesis is the opposite. I'm looking for tests through yesterday's high. There's a lot of energy up here. I'm expecting that to dissipate somewhat, and then I'm looking for this to fall back in and test lower before it balances out and it finishes somewhere in the middle for the closing range trade. Okay, and so for the closing range trade, again, impossible to predict. It might push in either direction, and you're likely to want to stay away or stay out of the way of whatever happens there. That's all I have for you. Hopefully, you had a good week and you picked up some more skill and got rid of some errors and improved your results overall. Hopefully, you're gaining something from these videos. Good luck, and I'll catch you later. Take care.